1212, this is the Alpha FX. Scream if you can hear me. Hit the number of likes. One two, this is the Alpha FX. If you can hear me, leave a message in the chat and also smash the freaking like button. Sometimes you gotta risk it to get the biscuit.
It's all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
Good afternoon. 1 2 1 2.
Wagwan.
Wagwan.
Wagwan, Jamaica.
How is everyone? Half of Suriname is here.
Guys.
Oh god, I'm so tired. Didn't sleep much. What's wrong, Beverly? Why are you sipping?
Good afternoon.
Hey, Chinton. How you doing, brother? Hey, Oni.
All well. How are you, Thomas?
Good. I'm gonna get some sugar rush, get some chocolate biscuit, and a coffee.
Amazing.
Thomas,
Amazing.
do you know this TV show? The Pop
No.
Store?
No.
Get to know it. Your kid will love it. This is
No.
what all the kids see today. Yeah, I'm seeing it. Good show.
I'm not sure if I
Every
want
day,
him
all day.
to watch you know, television. Sometimes, maybe 30 minutes a day, but not longer.
Yeah.
I prefer, like, you know, to
starts
read a
with
book,
30 minutes.
go out, play. Don't know. What is the optimal screen time for kids, like television?
1
When do they can 1 hour? Do you set it every day?
1 hour. I have 3 kids. I have 3 kids. One is a baby, 4 months. But the big one, when he finishes homework and playing and clean his part of the house in the evening,
Yeah.
1 hour of the TV time. In the weekend, it's a little bit different. If it's winter or summer, we're going out, we're in the house, so it's a little bit different. It can be longer. We watch movie or something.
Thanks. Yeah, we are going to discuss with my wife. Anyway, let's talk finance. Today, we're going to have... What are we going to have today?
PPI.
PPI. What does PPI? What is PPI? You can tell me.
Hola, hoy.
Producer.
Usually don't open on Fridays now. Fridays, really? Like, you catch me. Más bien, I was trying to say, y no he parado de venir, pero sí.
Oh, bragado, Ray.
Me has dicho. Now I always ask you the same question. Yeah.
What was the question? Ray, what was the question?
You know, no te acostumbras, ¿no?
The question was
I don't know.
someone else.
A mí, ayer fui con mi novia a Anytime Fitness en la tarde. Y I just don't like it in the evening. I don't know, como que no tengo enough energy.
Hola, ¿qué tal, Ray Tapia?
Ando como que bien dirty en la tarde, pero...
¿Cómo estás, señor?
¿Sí? Ah, ok.
Trados, forexos, marketos. Very good profitos.
Bye. Have a good weekend.
Thank you. You too, Ray.
Bye.
Bye.
Goodbyeos, Reyos. So, everyone muted. Alright. Going back to my question, who can tell me what is PPI?
I can.
Go on.
So
Big boy.
PPI is Producer Price Index, which is basically the price of finished goods and services sold by producers. And the difference between PPI and core PPI is core PPI excludes food and energy, and PPI doesn't. And in summary, today's reading, if it's higher than expected, we are selling gold, else we are buying gold.
Very good. Excellent. So PPI, the Producer Price Index, it's a leading inflationary indicator. It's leading because before you can actually purchase the goods, it needs to be produced. So the producers are going to produce. And if they have to pay more for the raw materials that goes into production, which then again going to turn into actual goods, if the price of raw materials increases, that means that they're going to pass on that increased cost to the wholesaler, to the retailer, and you know, all the way down the supply chain until the customer, you and I, are going to pay the high dollars or the big dollars for the new iPhone, a mug. So if the if the PPI is higher, that means we're going to see inflation down the line, a few months, few weeks down the line. And it's very inflationary. And the Fed right now is fighting off inflation, which meaning that the higher the PPI, the harder the Fed is going to go. Now recently, the last PPI actually was lower than expected. Hence gold, went through the roof. Because a lower PPI means that the Fed has an easier task, an easier job to do. I don't know, God, I'm really tired today. And what it means, if it's higher than expected, the prices are going up, inflation is still with us, amongst us, and that means, higher than expected reading, then it's going to slap down the price of gold because the Fed must fight off inflation. And one of the ways that the Fed can fight inflation is increasing interest rate. Now, if the Fed increasing interest rate because of the higher inflation, that's bad for gold and bad for stocks, but good for dollar. So as Chintan said, and as I sent out the full analysis to the team, let me fire up this bad boy. So, today, it's quite simple. We did the macroeconomic analysis, starting off with the market sentiment. We concluded that, yes, China is opening up. It's actually quite good for the stock market. And stock markets and gold started to shake off all the bearishness that's been, overshadowed at the beginning of the week with the, recession fears, and all of the negativity. It's been shaking off. Investors are in a good mood. Market sentiment is pushing higher. There's a momentum. And, the opening up of China definitely spilled over to the Europe and US markets because we see higher stock prices, which is good. And the other thing is that the Fed is in a blackout period, so they won't be able to say anything until next week. Because next week we're going to have the FOMC interest rate decision. It will be on Wednesday, starting on a Tuesday, and the data will be released on a Wednesday. And before that, we're going to have CPI on Tuesday. So next week is going to be another eventful week, kicking off with CPI. Unbelievable. So today, we discussed the macroeconomic part. with the market sentiment, concluded that it's still bullish, still pushing higher because of the positivity in the market. And remember that the Fed is in a blackout period, and while the cat is away, the mice will play. Remember that. And that means we have high chances that price is going to push higher. So we have a resistance on gold with the double top kind of scenario, but don't get fooled, because right here above this resistance we have a ton of stop losses. So it's an invitation to price to, you know, just tap in, come a little bit higher and whack all your stop losses. Hence I'm not going to enter into a sell yet, even though I have multiple confirmations for a sell. But come on a CPI day, on a PPI day, it's an invitation for price to come higher. And there's a possibility that it's going to just go high enough to tap into the stop losses, trigger them, and just melt. We don't know what the data is. So, you know, three possible ways to trade it. You can either use a sell limit or a buy limit, sell stop, buy stop. And, you know, if price push up, because I think it's going to push hard, PPI is an important number. Usually we have high impact. If you look back historically, what happened the last time, which was 15th of November. Yeah, the last time when PPI was released, we had a whiplash of 100 pips. Where is it? You can't even see it on the 1 hour chart, but it was literally a wick. There you go. If I move it, surprise! It was hiding behind. Whoa, look at that. Massive wick. First I thought, oh shit, I lost the wick, but no. If I move the vertical line, ta-da! That wick, ladies and gentlemen, is 100 pip. Actually, that's how much price whiplashed within seconds. Actually, yeah, literally within seconds. So that was a 5-minute candle on the last PPI. And if you look at the last PPI, I think there was no change, or can't remember what was it. Yeah, look at this, 100 pip to the upside. So multiple ways to trade it. You can either bet or speculate on, you know, that we're going to have the same kind of effect. I wouldn't hold trades too long, because as you can see, last time price immediately came back and wiped all the buyers, and then price went into the other direction. Typical buy the news and sell the effect scenario. Buy the news because it was lower, the PPI, but on the other hand, I think there was another data print on this day, PMI month, and the fact that you know, even though it was smaller than expected, inflation is still too high. So hence the market came back and slapped it down. Buy the news and sell the effect. Oh, only 160 likes. If you want to keep the stream going, whack in another 100 likes and I will continue.
Should be even more likes, Samus, like 400 or 500 at least.
Oh, thank you.
Gotta push them.
Yeah. Well, they will learn.
I have a question for you, Thomas, regarding the FOMC.
Okay.
So when the FOMC projections come out, this will define the market trajectory for like the next 1 month, 2 months, 3 months.
Say that again. Sorry.
Sorry. When the projection comes out, the number of FOMC, it will define the trajectory, for example, of gold for like the next week, next 2 weeks, in general.
The trajectory of what? Like an outlook?
Of gold. Yeah, an outlook of gold.
An outlook of gold by FOMC?
Yes.
No. They don't talk about gold. It's different. So the FOMC is the Federal Open Market Committee. What they do is that they manage the money supply.
Yes. Now I think I phrased my question wrong. So it will determine the strength of dollar, this FOMC, right?
Hell yeah.
Stronger or weaker?
Hell yeah. Oh my god, it's gonna determine so hard. I mean, just give you a brief look back to year to date. What happened? So this year, when did the Fed start to raise interest rates, David?
Great question.
You don't know? Wow. Good thing
No,
is
I
that.
saw it, yeah.
Good thing is, I want you to after this. Yeah. Thank you.
Okay.
I want you to go back in Discord daily reading, and I want you to read this article. A year of pain. Investors struggle
Okay.
in a new era of high rates. That summarizes or catches up what happened the past 1 year with the overshot and undershot, the policy mistakes, the inability to predict inflation correctly. So many mistakes the Fed did. Read it, definitely. You need to understand what changed. What was the interest rate environment? Because at the end of the day, you guys trade on financial markets, and what makes the world go round is money. And who controls money, David?
The Fed, yeah.
The Fed. So, do you need to understand? Does a trader need to understand the enemy, the next move,
Of course.
the thinking? You have to.
Yeah.
The best way to do it is start reading financial news and also pay attention for anything the Fed says. Another good thing in answering the question whether this is going to be affecting the dollar, yes, it will. If you look at the year-to-date performance, for example, the US dollar, you're going to see that actually now go back 10 years. 10 years it was almost flat from 2017, the past 2 years, and year to date, look at this. March, the Fed started raising interest rate, and boom, year to date performance was positive 30%. Insane against the Japanese yen, but again on against other currencies as well. For example, the GBP against the USD eroded 20%. So yes, the FOMC is going to affect heavily the dollar.
But I think I made my question wrong, Thomas. I'm gonna explain to you again. So, for example, if the number comes out as expected, since the market is already positioned for that number, the impact will not be as brutal as if it's like way above and way below.
I think the number itself won't be a problem because it's most likely priced in already. So the 50 basis point.
Yeah.
If it's higher than expected, 75 basis point, now that would be a surprise, and it's back on the table because we still have tight labor market. We have we could have inflation. We have PPI today. We have CPI next week. So what it means that based on it's too early to tell. These data, these events, these numbers are going to determine the market sentiment, what the market thinks the Fed will do next. And then on Wednesday, the Fed will come out from its cave and J Powell will say, okay, so we're going to raise 50 or 75 basis points. But if you look at the, I think we're going to have a projection as well. Yes, economic projection, which is a good thing. If you look at the previous projection, it has the Fed dot plot, and I'm pretty sure they're going to issue another projection that what they deem as neutral or equilibrium interest rate that helps to fight off inflation. Remember in September it was 5%, but recently another journal article came out and many of the Fed officials thinks that interest rates should be higher. And J Powell said last week and a week before in the Brookings Institute when he had a seminar or something that they're going to slow down with the rate hikes, so they're going to deliver 50 basis point instead of the 75, but they're going to extend the duration, so they're going to go slow and hard. And that is going to come in next year in 2023, and when it comes, stocks and gold is going to definitely get hammered. So now, if you look at the year-to-date performance of gold, let's delete that. So this is where the war started. We kicked off in January, then the war started, so gold price went up. Stocks went down immediately. And since that, we are in a downhill, and now it's retracing back a little bit, but it came back where it started at the beginning of the year. How insane is that? So you can draw a straight line. Price went up and then down and came back where it started, back to square one. Stocks as well, if you look back, US 30 for example, insane. January the 3rd, and price dropped, or the performance was negative 22%. Yeah, bear market. So now we are coming back because investors, you know, the cat is away, the mice will play. They know there's interest rate increases coming next year, more and harder. But now they're partying like there's no tomorrow.
But I remember, Thomas, when the war started, it was like 4 or 5 a.m. Portuguese in UK time. And I woke up next day, it was like 9 a.m. Something like that. And gold shot up like 400 or 500 pips as soon as they entered Ukraine. It was nuts. Like the invasion 22nd.
We traded that.
I got a bit of the move when I woke up. Got some retracements.
Yeah, because we have actually not the event, but we had Ivan from Ukraine and Iran from Russia. And Iran was translating the news that was in Russian television, so we got the information firsthand, straight out from Russia. And when we knew there's something happening, we just made a decision, started buying. We made a hell of a lot of money. Unfortunately, it's not nice, but we have to, you know, step back and just focus on.
We have to adapt. Yeah, can think with the heart with trading. So
yeah, definitely emotions.
Much appreciated for the explanation, Thomas.
You're welcome, brother. Where are you from?
Portugal.
Portuguesa.
Português.
Portuguese. Obrigado.
Paulo, portuguesa, Paulo.
Não, eu fuck off, mano.
Vamos falar português, é isso aí.
Não. Focus on English. What the fuck? You don't chill out over there. You see? Shit.
Question for you guys. What do you think about PPI? Is it going to be lower?
I think it's going to be lower.
Yes, I think also as well.
I think as well. I think we're going to see 1820 soon. I mean, imagine how many stop losses are sitting here. So, let's draw up the strategy. But you guys are ready if you attended the morning briefing, right?
Yes. I shouldn't say, but I lost half of it, and I haven't, you know, tapped in with that already. So, but I think I'm ready. I think.
Yeah, well, you can rewatch.
If you don't mind.
Yes, sure.
Why do we think the cost of production is going to be lower than previously? When energy prices are going up, cost of employees is going up, so wages and all that sort of stuff is all probably all-time high. Why do we think it's going to be lower than previous?
Wasn't the numbers, initial numbers yesterday was a bit lower?
So say that again.
Wasn't it the initial numbers, jobs claims, wasn't a bit lower than expected?
Yes.
But the continuing was higher.
Jobs, isn't it?
Right.
Yeah, and that's labor market data. So there's nothing to do with PPI.
No, because you mentioned about the cost of employees or something. You just mentioned something. So I thought there was a correlation between, you know, the data.
Yeah, but you know, labor is only one factor of production, because in production there's so many things goes in. Land, labor, and capital, 3 factors of production. So if you take out almost the employees, which is one of the highest cost at every firm. You still have raw materials, you still have land, you know, rent and raw materials.
But then again, I mean, practically will be less, or not?
Who knows? I think it's going to be a little bit less. And one of the reasons to answer Imran's questions, in economics we have something called substitution. Many of the firms already started adapting to the higher inflationary environment, so they started, you know, looking for alternative products, cheaper sourcing, you know, switching. It's same as households. Some people shopped at Waitrose for years, but now they can't afford it. The Waitrose essential bubbly champagne, so now they're going to Aldi to buy the cheap frizzante.
Okay.
Makes sense.
Thomas, Sergio has a question for you, but I think you should speak instead of typing because you're probably not watching the chat.
Sergio Andrade is asking, Tomasz, do you think that we can have some correlation, the high payroll numbers and PPI today? Again, it's two different things. So one of them is labor market, the payrolls, and the other one is, you know, PPI, producer price index. Not sure. We could have. Anything is possible. I'm gonna just watch on the sideline today. Don't wanna, you know, overtrade. We made good money this week. The answer to your question, correlation between high payrolls and PPI today. You know, I think the payrolls are going to affect the CPI, not the PPI, really. Hey, only 224 likes. That's it. Turning off the stream. Push it up to 300, boys.
Someone's got a question on the technical side. Lower time frame, there's like some rejection playing out. Do you think, or are you looking into anything particular in the technical side?
What was the question?
On the technical side, on gold, are you waiting on any technical aspects before entry, any trade, or are you just looking for the data to be released and then make a decision?
Yeah, I'm waiting for CPI next week. So PPI, I'm just going to observe it. I'm not looking into any trades today. Sorry, I'm just so tired.
Thomas, you're just here for the company.
Absolutely.
Makes sense.
Yeah.
That's so good.
Evening.
Hello. Is Marwan here today?
Marwan's driving around the desert right now.
Oh, we don't have the volume god.
Oh, so what's it going to do if the PPI is as expected? We've got a lower and we got a higher. What is it going to do if it just stays the same, or what they think?
What do you think, Cheryl?
No idea.
You have to make...
Okay, where are we structurally? Because sometimes I reckon they don't do it necessarily on the result. Sometimes they do it where it is structurally and where it needs to go. So where is it going to take out the most liquidity? Probably if it... Oh, no, there's a question.
Hamas's TP at 1865 probably.
Well, yeah, see, it could take out the top, right? But there's also liquidity under that trend line as well. But...
That's right. That's right.
So I don't know. See, 50-50. Where people least expecting it to go is where I think it'll go. You know what I mean? If everyone thinks it's going to go down, it's probably going to go up.
Last time it was 100 pips up and then 100 pips down.
Yep.
No, 200 down, sorry.
Well, it would make sense, wouldn't it, to spike up, take out the liquidity that's above that level, wouldn't it? Because it's closer and easier. And then spike it down and take out the liquidity below that trend line. That's sort of what I'm thinking anyway, but I don't know what I'm doing.
I mean, high time frames, it can confirm that theory right there because it looks like it's pushing on that direction since like 4 hours ago.
Sounds like a conspiracy to me.
But you never know. There's much manipulation on the market all day long, so it can be a tough one. And since Thomas mentioned it's Friday, so we gotta be careful on a Friday though. We're gonna waste all the profits, you know, towards today.
But the market goes for liquidity, right? So that's why sometimes you'll think, oh, the news is bullish, but then the thing does a bearish thing, right? But it's doing that because of liquidity, right?
True.
Is following by the news selling the fact so far?
God. Yeah, I think because the bullish market sentiment is shaking off everything, I think the market will push up. So we're going to see a nice pump to the upside. And when the power hour comes just before the New York Stock Exchange close, or could be at open, depending on the data, then we could have a sell-off. But so far, you know, we have a very nice push to the upside. Look at these candles, beautiful, just straight to the moon. Very good.
If it breaks the top before the news, it might just go down then.
Anything is possible.
Yeah.
It's not easy, innit?
It's different this time because the economy's like trash, basically. Interest rates are shit, got inflation. So news that would normally take the market down takes the market up. It's just crazy.
Yeah, but that's how finance work.
Yeah, trying to balance.
And you know, it's you should focus on the Fed, who controls the money. It's like, you know, my wife's with my balls in her hand. You know, they're controlling the whole world with the money, and they can decide whether they're going to print more money by expanding the money supply, or they're going to contract the economy by reducing the money supply. And that's what makes the world go round.
What do you mean contract the economy?
The money supply. So contracting the money supply to close the tap on money. There are different ways. I'm going to do a session on how money is being created, because many people still think that there was a printing machine where, you know, yeah, but that's not how money is being created. Money is being created through the money multiplier. Money is being created by raising, lowering interest rate. Money is being created by, you know, reducing the minimum reserve requirement ratio for banks. So it's a complex thing, but the Fed is controlling the money supply throughout these methods and tools. For example, if they reduce the minimum reserve requirement ratio, which is a fantastic word. Let's give you an example.
Is it correct
Banks,
when you say the money supply is the price of the money?
So the minimum reserve requirement ratio, each bank has a responsibility to hold reserves, depending on, you know, if you go to the bank and if you put your money into a bank account, the bank isn't going to put it in a safe. The bank is going to lend it for someone else.
For a reserve, which is the Federal Reserve?
No, any bank. But banks can deposit at the Federal Reserve, but that's a different story. But focus on just a simple bank.
Gotcha. Yeah,
so you go into the bank, you place a checking or deposit of $100. The bank, depending on the actual reserve requirement ratio, can lend up to around 90%. So they can take your money and give it to someone else, and your asset becomes a liability. It's the asset of the bank.
Yeah, I've seen a lot of them. Sorry, sir.
And your asset becomes a liability. It's the liability to the customers, the asset to the bank, because it generates interest. And that money that been put into lent out to someone, that becomes a deposit again, because the bank has to deposit that loan on a bank account, which then becomes an asset. And that asset can be further lent out. So the $90 which was lent to a new customer, $81 of that can be lent out to another customer, and so on and so on. This is how money is being created.
Okay.
Yeah.
Wow, that's quite
yeah.
That's a good system.
Yeah, absolutely. And the banks have to keep some kind of reserve just in case. And that reserve is the minimum reserve requirement ratio. And there are strict rules about in Basel III, which requires bank to hold, liquid and illiquid assets. So they have to have cash, they have to have gold, they have to have derivatives, bonds, but don't have to have, but it's a mixture of many other things. And if the higher the minimum reserve requirement ratio, the harder for banks to lend out money. And if they don't lend out money, if they don't lend out money, then
people cannot borrow money from the bank then.
Exactly.
Right?
So there's no new money is created.
I was thinking, instead of they having the physical products, as you mentioned, actual money in gold, I thought the banks had like shares of the gold and in all these particular things that they needed in terms of what the reserves require. That's why I thought banks made trades.
Hello.
Hello.
My goodness, that was some deafening silence.
Yeah,
Definitely silent.
I give the opportunity for you guys to talk as well. I mean, I'm tired.
The banks in Lebanon collapsed exactly because they used all of their reserve and they lent it to the government, and that's an example of mishandling the deposits.
We have 5 minutes until the PPI. Who's in a buy? Who's in a sell?
I'm gonna wait for 18, 10, 11, and then maybe sell from there. I think it's too high to buy now.
Is it? Buy high, brother.
Is it too high, Thomas?
No, it's never too high. I mean, imagine how many stop losses are here. It's those stop losses being hit. Chances are good the price is going to, just spike up to 1820.
1820. Wow. Okay.
That's what I'm thinking. I'm thinking it'll go 1820.
But we don't know the data. Yeah, no stop loss, no problem. Buy high. All the usual. Go hard, full margin.
I think it doesn't matter about the data. Do you know what I mean? Like the market makers will take the market where they want to take the market.
Yeah, the evil market makers.
If it's expected, do you know what I mean? If it comes out as it's expected, they can take it whatever direction they want, right? If it comes out different than expected, then I think that changes everything. But if it's the same, then I think they choose which direction to take it. I'm not going to take a trade. I'm going to wait and see if it spikes up. I'm going to try to short it from 1820. If it, I mean, around that, depending on what happens, but that's what I'm going to do. I'm not going to be in it till I see what happens.
Nope.
Because I'm too much of a chicken shit, that's why.
Then again, in 1820, you got some room to go up and correct, you know, the liquidity grab up there.
Yeah.
Around, you know, 1809. Hold on. Okay.
Depends how wicky it gets. Like sometimes it just goes a direction, but other times it does these big wicks either side, and then you're screwed, especially if you put in one of those buy orders or whatever.
Yeah, gold is messed up sometimes. It moves differently.
Yeah.
You're gonna be careful with that for sure.
Yeah, I took a big hit to my account once with one of those big giant wicks.
You're not the only one, trust me. Gold, it cleans everyone, like in general.
Yeah,
I think
which
that's
is
impressive when you say once. Well done.
Oh, you know why though? Because I trade the world's smallest amounts of gold. Like you guys are doing like 30 lots or whatever. I don't even do a whole lot, so.
Step by step, you'll get there.
So all leveled up.
And
No,
we
'cause
have
if it
30
moves-
seconds to go until
If
the
it
PPI
moves-
data release. Is it gonna go up or down?
I'm voting up, but I'm not trading it. I'm gonna wait and see.
People asking me, do you have any open positions? Yes, I do. And 4 seconds until the data print. Shout it out if you know the data. And I guess it is lower than expected or higher than expected. Let's quickly have a look.
Oh, it's going down. That surprises me. It didn't wick up much at all.
It's
Higher than expected. Wow, yeah.
Yeah.
Then it is going down.
This is crazy.
Boom.
Boom. And the man was right again. Don't jump into trades. I'm not jumping into any trades.
Nope.
Pips for profit says pure gamble to down. No, it's not gamble. This is how market works. The number was higher than expected, meaning it has inflationary pressure. Because the higher the factory prices, the higher the producer price, the more inflation we're going to see. And the higher the inflation, the harder and stronger the Fed is going to increase interest rate. So it's not gamble. You just need to learn your economics. And then maybe you can make some money.
Guys, just have a look at US 30. It's falling hard.
The higher the rates. Oh! Wow. That's hard.
Three 898 33. I can't even read that. 335. Okay, 400 points.
Surely they're going to push it back up to collect the liquidity, are they?
They have already tapped in this week
Yeah,
to the
they
upside.
tapped it enough to take it up. Yeah. Yeah, I thought they'd bring it up a bit higher, but they didn't. First.
Oh, Nanu said he has already stated that PPL is going to positive, but nobody noticed. Now we're noticing you, Nanu. Thank you so much. Ah, insider trading. How did you know? Do you have a crystal ball? Wow.
Information is well connected with the government in America. That's what it is. Imagine.
All right. We watched the PPI, but that's gonna be for me today. I haven't traded it, and I'm not planning to enter into any trades on PPI. It's Friday, time to enjoy a cold beer and some free time with my boy. That's it for today, guys. Next week we are going to have CPI. So be ready. Get your Wise credit card or boyfriend's, top up your account, and we're going to live trade the CPI and the FOMC, which is definitely going to be a banger. Until that, see you all on Tuesday actually. Tuesday. See you on Tuesday. See you guys. Bye bye.
Thank you.
Bye.
Bye-bye.
Have a great weekend, everyone.
And those of you who are still watching the stream, if you want to trade CPI with me, if you want to see my analysis, if you want to see my view, I mean, clearly today, again, I mentioned that it's going to be, if it's going to be higher than expected, then market is going to go down, which it did. If you want to have same kind of setup analysis, if you want someone to guide you, a professional economist who used to work on the trading floor, then you have 50% off for one membership. Take it. The link is in the YouTube chat, or you just go to the website. The link is in the description. Take the one membership, and see you all next week for the CPI trade, which is going to be only for members. Thank you so much. This is the Alpha FX.